Hello, I'm Bernard Hickey with the Daily Briefing from interest.co.nz. Today we'll look at the latest big move in mortgage interest rates and see what might happen next. We'll also find out more about the dramas at MFS Pacific and now MFS Boston, and have a quick look at the latest net migration figures, which have a big influence on the housing market and the economy generally. Move by the ANZ and National banks that has caused quite a stir in the mortgage scene. ANZ and National have both increased their 2 and 3 year fixed rates. They lifted their 2-year rate to 9.7% from 9.5% and have put up their 3-year rate to 9.55% from 9.3%. The jointly owned banks are blaming tough conditions in wholesale markets. All over the world, interest rates on wholesale credit markets for non-government debt have risen as banks become more nervous about lending to each other in the wake of the subprime credit crunch. That has eventually flowed through to retail interest rates. New Zealand is not the only one affected by this. In the US, the Federal Reserve there is likely to cut its official interest rate to 2.5% next month, but interest rates for consumers and businesses there have actually risen. We'll find out more about our interest rate outlook next Thursday when the Reserve Bank Governor Alan Bollard announces his latest interest rate decision. He's expected to keep rates on hold, but that's no guarantee for steady mortgage rates because they're based on wholesale longer-term rates rather than the official cash rate. It will pay to watch the turmoil on global markets because eventually it will trickle down to this part of the world. Now for a look at the latest dramas around the MFS group. MFS Pacific is asking its debenture holders for more time to propose a moratorium on its debt repayments. MFS Pacific needs to sort out exactly how much support it can expect from its Australian parent MFS Limited. MFS Pacific has what it calls a put option with MFS in Australia, where it can force its Australian parent to pump money into MFS Pacific. But MFS in Australia is in itself in dire straits and is trying to refinance its own debts. Meanwhile, sister company MFS Boston is also asking debenture holders for a debt moratorium. MFS Boston director Kingsley Turner told interest.co.nz that MFS Boston doesn't know how much support it will get from MFS in Australia, so has decided to shut down lending and borrowing now to preserve as much value as possible in the loan book. MFS Boston is assuring debenture holders of $38.5 million of debt that it believes it can repay all of it, as well as in the interest. And finally, a quick look at the latest migration figures for January. These figures show that just over 1,000 people a week migrated to Australia in January. This means migration to Australia in the year to January rose by a third to 28,615. That's a small city the size of Blenheim. Overall, there was net migration to New Zealand of 480 in January, and migration for the year fell to just under 5,000. That's a 7-year low. These numbers reinforce that the boost from migration to the economy and the housing market is waning, and that gives the Reserve Bank more weapons to fight inflation, although it is seen as unlikely to cut official interest rates anytime soon. I'm Bernard Hickey from interest.co.nz with the Daily Briefing. Catch you on Friday.